This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I'm going to take a quick detour for a few tabs and just show you a couple of developments in this space. Then I've got to show you something that I find hilarious pertaining to this gold offset. I've got to show you that, I've got to share this with you. Then I got a little bit of bullish hopium, which, although a lot of people say it's hopium, is actually, I believe, founded in reality. It aligns with the cycles and some Elliott wave counts, so I'll show you that and share that with you as we approach the end of this year to wrap up the final phase of what I believe is a true 4-year cycle. I know there's a lot of 4-year cycle deniers out there at the moment. That's fine, you do you. And then I want to show you some more supporting evidence that actually fits with the whole idea of what I've been saying on this channel, which is that we are going to see some major tops come in the not too distant future and then start to head for those major 4-year cycle lows in late 2026. And as ever, we will look at some charts, TA, live positions, and all of that good stuff at the end too. So let's kick things off with some data. And that data is, this has been the worst October ever. But it's not actually over yet. And those of you that have been paying attention to detail here will know many of these Octobers spent the vast majority of October in the red, only to then do all the pumping in the final week of the month. So don't discount this just yet. I would not at all be surprised if we actually see a stronger finish than what we've currently got painted on the charts. A while ago, I was speculating that this whole Binance thing where they turned the stop losses off and liquidated a bunch of accounts may have been a $200 million pardon. I put the tinfoil hat on, I went down a little bit of a rabbit hole there, did some spitballing, and we now officially have CZ pardoned. So I do wonder if this is all part of a big 4D chess move by the US to try to centralize control and power over the Bitcoin network. CZ says that he's going to do everything he can to help make America the capital of crypto. Kind of weird. It's almost like we bought him out, right? It's almost like we bribed or blackmailed him. Like, you can spend life in jail, or we can, you know, steal everyone's money. You can give us 200 mil, we'll give you a pardon, and then you can come and work for us. Got the same kind of vibe that we saw with the World War II scientists moving over to NASA and that kind of thing. Anyway, we're not trying to go down too many rabbit holes today, but I can see this is what's kind of happening at the moment. We've also had Coinbase list the BNB token, which I find a bit weird, right? It's like, why would you do that if they're really your competitor? Is there a merger in place here? Is Coinbase going to gobble up Binance? Or is Binance going to end up blowing up? Is Binance the next FTX, which is load-in, which will therefore centralize power over to Coinbase? I'm sure BlackRock and Trump would much prefer that, since it kind of centralizes the control and power over the custodian for the BlackRock ETF and all of this kind of stuff into the US's hands. At the same time, you have Ripple, which is a US company, trying to build the bridge between the CBDCs and possibly some kind of SDR basket and replacing the SWIFT system, right? I don't really know. I'm spitballing, okay? But stuff like this, normally when I see it and I get a little kind of spidey sense, tingling sensation right in the tip of my tail, I tend to be right more often than I'm wrong about this kind of thing, okay? Like, when I start to smell a rat, it's usually because there's a rat about somewhere. And again, you know, Coinbase, Ripple, Gemini, all listed as donors of the president's $300 million White House ballroom. So it's like, we'll buy you a ballroom, okay, if you just make sure that we're too big to fail when this whole impending global crisis shows up. So I think watch this space, right? I think things are going to get a lot weirder before they become clear. Anyway, we'll continue to pop in and revisit these subjects every once in a while, and I'll continue to proclaim that my tinfoil hat is likely too tight, although it's surprising how often it turns out that I'm not actually as paranoid as people think I am. Often they really are out to get us. Something else I wanted to just quickly touch on before we get into the meat and potatoes of today is I'm seeing this do the rounds. There's lots of variants of this chart, but essentially what people are pointing at is that Bitcoin's break-even mining cost is right around the price it's currently trading, which implies that many miners are barely profitable at all, okay? But it's not really legitimate to say this, okay? The average cost... All right, goodness sake, come here. Welcome back to the physical realm, little dude. Okay. We can talk about the Bitcoin floor production cost, please. Thank you. So, where were we? Oh, yes. Currently, the average cost across all the miners is somewhere in this 70 to 80k neighborhood, okay? And it's only the very small and inefficient miners that are kind of at break-even price around 109k. It's also of note, most of the really big entities in the mining space, the big guys, okay, are mining down between 40 and 50k. Okay, so they're probably doubling up, roughly speaking, at this current price level, with the majority of the kind of small to medium miners somewhere in this 70 to 80, or let's say 70 to 90k window. And then there's only a few of these very inefficient small miners that are at break even now. okay? But I wanted to kind of touch on this public service announcement because I can see a lot of people pointing at charts like this and saying, oh, I don't really get it, like they're not profitable. They're also making these strange claims, like because they're barely at break even now, that means price has to move up, which is also not true, right? So I just wanted to kind of touch on this and let you guys know as a public service announcement in case anyone was wondering about this. Now, remember this chart here? This is Bitcoin with the candlesticks down the bottom and gold with a 90-day offset at the top. Now, lots of people got rubbed up the wrong way about this, okay? And so here it is very briefly, Bitcoin in orange at the top, gold 90-day offset at the bottom. I make the case that if we kind of drag these a little bit, you can see that more or less they bottom roughly at the same time, okay? Now if I just up, they run and peak at the same time roughly. They do diverge a little bit in the middle here, okay? But this bottom, roughly speaking, occurs at the same time as gold's. Missed it by like a week or so, whatever. Okay, then they both continue to run up. They both base at the same time. They both run up. They both bottom roughly at the same time. Missed it by a few days here. Okay, then they continue to run up at the same time. Then they both peak at the same time, consolidate, and gold then takes the lead. Okay, so I've been making the case that you can feel free to discard this as ever. Some people got really triggered by this for one reason or another. I'm not really sure why. It's just a chart and you can always just disregard it if you don't like it. But it kind of implies there's one final push into an ultimate high for Bitcoin. It doesn't necessarily mean it has to go this high. It just means there's probably another upside leg here for the price of Bitcoin, okay? It's just a speculation, okay? It really is nothing more than that. And again, disregard it if you don't like it. But the reason I had to repeat this and bring this up today, because Raoul Paul has come out with his new 188-day lead gold chart, okay? Because when you look at it like this, it does look rather compelling, okay? It's pretty easy to say, look, this bull market's going to run well into next year and all this kind of stuff. But I said, if you zoom out a bit on this chart, it's absolutely comical, okay? If you thought this doesn't track very well or this is not really a real piece of alpha in the market, wait until you see what happens when we zoom out on this, okay? If people thought the 90-day offset was bad, this 188-day is silly sausage material. Wife, will you take this, please? Thank you kindly. So I'm going to change this offset to 188 days and we'll see what we can see, okay? So first of all, here's the bottom for Bitcoin and gold bottoms way after, okay? So all of the divergence, I guess arguably they bottom roughly here. Well, Bitcoin bottoms here. Gold, does it track? I don't really think so. The divergence in the middle, we had that before. Okay, what about all this? Does kind of consolidate together and move up together and then kind of top together. And then they diverge massively here, right? 180-degree polar opposite again. Here they kind of go and then here they diverge massively again. Like, what am I looking at here? Is it me? Is it me? I don't know. Please let me know in the comments. Again, let's not make this personal. It's just business, okay? But I think fair to say, if you thought the 90-day offset was bad, then again, this 188 days seems to me like it's absolutely ludicrous. And it does seem like he's really trying to sell people on the idea that we are early stages in a bull market. Maybe that means the altcoin season is just not here yet because that's right, we're going to run well into next year. I don't know, man. It feels a lot like I don't want to accuse him of anything, but if I was him, I might do that. I guess that's what I'm trying to say, right? If I had some old pals and they were like, hey, can you be right for most of the cycle and then be 180-degree flat wrong right when it matters most? I'd be like, yeah, sure, I'll throw you a bone. I'm just guessing. I'm just guessing some people are like that, okay? And that doesn't mean he is, okay? Let's make that very, very clear. I don't know him. He may be the most honest person on the planet. It's not my place to say, really. I'm just spitballing as a very paranoid crack-smoking camel on the internet, okay? And one thing I do think for sure is this offset seems disingenuous at best, okay? Now, I think I like the 90-day one, but the 188-day one, I don't know. I'll let you guys be the judge of that. Again, we're still seeing more 4-year cycle is broken. No FOMO, just institutionally structured bid instead, okay? But because as I showed here, if you copy and paste these two lines, okay, and drag them, what you'll notice is, okay, this whole thing looks pretty similar to me, does it not? Is something like this on the horizon? Obviously not 900k. Some people came straight out and said, oh, why are you calling for 900k? It's just a squiggle, right? But why couldn't we at least make it to the top of the channel and then roll over for that 4-year low? I don't see why we couldn't, to be completely honest with you. So there's a little bit of hopium, okay? Now, from hopium to more serious edge, we know the White House and the president are going to meet with China to discuss tariffs and that kind of thing, trade deals, right? This is 48 hours, by the way, before the 100% tariff on China is set to go live. Is this going to be a tariff on, tariff off situation? I don't really know and I don't care. But what I do want to use this for, okay, is a very nice example of what I continuously bang on about on this channel all the time. I'm always saying cycles are in control, everything else is narrative, right? I think it's fair to say that. I am always harping on that point. I am always jumping up and down, banging my fists on the table, throwing my toys out of the pram and saying, guys, it doesn't matter what anyone thinks, cycles are in control. It doesn't matter what anyone tweets on the internet, cycles are in control. It doesn't matter what your narrative is or where the liquidity is allegedly coming from or what the rate cuts are doing because cycles are in control. Well, now is a time for you to see this in action, because now we are about to show you in real time how the cycles are in control, and this is narrative, okay? Why am I so confident this is narrative? Because on October 30th, we have Bitcoin set to find a daily and a weekly cycle low. At the same time, we have the S&P 500 set to either confirm this low is in or have one final undercut to a double bottom and mark that as the daily and the weekly cycle low. At the same time as we are probably working on a reset into the end of the month for gold and silver for those to find their daily cycle lows. So it is with great confidence I can come back here and say, irrespective of what happens around this date, okay, and obviously allow me 1 or 2 days of wiggle room. If we are trading down into the 30th, I don't want anyone coming here and telling me it's wrong, okay? Give it a couple of days of wiggle room, okay? But what I am saying is, it doesn't actually matter what the outcome of this is because the cycles are bottoming, not just the daily, but the weekly cycles too, into this time frame. And that tells us that no matter what happens here, allowing a couple of days of wiggle room at the most, we will get to see higher prices for Bitcoin and for the stock market walking forward out of this date. Because once again, cycles are in control and everything else is narrative. So now we're going to get to see a real life example of this. And I'm looking forward to coming back and pointing at it and showing you the power of cycles, which is why I spend so much of my time doing this in the first place. There are many people that are ready to give up right here, right now. In fact, I've even had a kind of weird situation where I've got someone stalking me, right? Somebody continuously creates more and more accounts just to comment on YouTube and troll me and then create them on Twitter, and I block them and never respond to any of them, but they just keep making more and more accounts and be like, hey man, it's me again. You owe me a thank you or an I told you so or whatever. They have been bear posting the entire way up and saying this was a failed cycle the entire way up. They were calling the top at like 40k and they continuously did that. And I just started to block this person. Like, I don't care anymore, right? You've clearly invalidated. And even now, they have fully given up because they are unable to just wait another, I don't know, 2-3 months at the most to see if we do indeed get that final blow off top moment. If we do, then all is right with the world. And if we don't, well, we're going to have bigger problems, okay, than giving some stranger on the internet that won't stop creating more and more fake accounts to come and troll me with a pat on the back, okay? So please don't waste your time making any more accounts. I'm just going to keep blocking you. But for everyone else, okay, let's not quit right now where this troll with a strange hard-on for me on the internet continuously wants to invalidate this cycle even though he's been doing it since 50k, okay? Let's wait and see just a few more months, okay? No matter what your opinion is, let's at least say we'll reserve the right for judgment until either we get a blow off top or we get a break of true market structure and a new weekly lower low close, okay? Until one of those things happens, then I think all of us should reserve judgment and accept that anyone making claims, like for example, it has topped, it has not topped, it will go to this price, it won't go to that price. All of that is just guessing. It's worthless guessing. And so I'm suggesting we protect our prana, we protect our energy. We don't worry about trying to guess numbers or guess the dates. And instead, let's just take this at face value for what it is, okay? Which right now is a structure of higher highs and higher lows on the weekly time frame, right late stage cycle where we are most likely to see a blow off top if one is going to occur, right as we're due to see the weekly and the daily cycle bottom for this asset class into the end of this month, probably on some kind of tariff off type statement. Where is it? Right here, okay, probably like, oh no, we're just going to delay this for another 90 days or something like that. That will set up the 3-month window for the left translated weekly cycle, won't it? Which of course will get us our big blow off top and then all will be right with the world, right as every man and his dog is cheering on that Q1 top, okay, and we can start to take profits and target that 4-year cycle low. So my message is clear, I think, okay? Cycles are in control, everything else is narrative, give it a couple of weeks and hopefully everything will be okay. I also found this, and I thought this was fascinating, okay? If the current cyclical bull market ends up blowing off with an AI-driven melt-up, then it's worth pondering what this would mean for the secular bull. By his count, the current regime is now 16 years old. It's interesting that he is counting it from 2009, because I'm counting it all the way back to the 80s, whereas he's counting the one from the 80s to 2000 as one, instead of from 82 to today. But I don't really think it matters, right? I guess what he's saying is this is 2 secular bulls and I'm just calling it one with a half cycle low in the middle. But as this chart below shows, market cycles expressed as sine curves
we can see that we're in this fifth cyclical bull market within the secular wave, and that's the exact pattern for 82 to 2000, and it's pretty close to 49 to 68. So that's something to keep in mind as we enter this fourth of the fifth market cycle since 2009. So he is suggesting that this is one major cycle, okay, this is two, and then we are currently, especially if we blow off, about to top for the major cycle once more. Now, I am actually suggesting that this whole range break here, this was the start of the secular bull market, with this being the half cycle low, okay, in the middle, and thus we are about to conclude a 43-year secular bull, which is why we are blowing off and going vertical at the end in the face of gold rallying at the same time. And as I've been saying over and over again, it's been written on the melt up chart the whole time, hasn't it? That we will probably get this lost decade in here. That's what we talk about every weekend at the weekend's deep dive. Stocks going sideways, commodities entering a super cycle. And that is because this major secular bull market is due to top. Right at a time, no less, when people are talking about the roaring 20s, up only forever, et al. Right? So unless we do start to be much more healthy in the ascent angle here, we are likely in that topping zone, aren't we? Okay, so interesting to see it from someone other than me here. And the more vertical we go, the more likely it is that those highs will not be touched again for a decade or more. And it actually gets even more interesting here because, again, as I just said, this is all happening in the face of gold moving way, way, way higher as the central bank's getting ready for the reval and the new monetary gold-backed system, probably with a digital component. But take a look at what we can see here, okay? Down the bottom is stocks versus gold. This is turning down, okay? That speaks to stocks underperforming precious metals over the rest of this decade if this does not change. And of course it can change, right? It can change any time. It could turn up, okay? But if it doesn't, then what this will essentially tell us is my call is still correct, right? The signs are on the wall, early doors here, that gold is probably going to outperform the S&P, and that is probably because the S&P is about to have this blow-off top moment and then trade in a lost decade. All the while, gold does this, resets for its 4-year cycle low, and then moons up to my long-term target in the 5-figure neighborhood, which most people know about, where they will finally reval the gold higher, fix much of the debt for years to come, and then peg it to some kind of digital CBDC component, great reset, et al. So with many people talking about a 5-year cycle and ISM and the business cycle and liquidity, again, okay, I think those people are wrong-footed. And we're going to find out, okay, one way or the other. And as ever, I reserve the right to just stay long and strong for a much longer time than I am anticipating if we don't see any true breakdowns. But so far, it looks a lot to me like we're in these final innings. It looks like the writing is on the wall here. It looks like my long-term call and macro call is correct. And he too is also pointing at this whole gold offset or lead and lag or rotational trade, even though it's not physical rotation, between gold and Bitcoin. He's talking right here, okay, this is global lick, or I should say global monetary supply, okay, in orange here. And you can see gold, which has become massively overextended relative to the money supply. But when we do the same comparison with Bitcoin, you can see Bitcoin has traced it much closer. And so he is wondering here if what we're going to see is a major top form and a bit of a correction for gold, something like this, back down towards that monetary supply level. Meanwhile, at the same time, we're probably going to get a baton pass, in his words, not mine, of Bitcoin to the upside into the end of the year. So super interesting and wild times for sure. Short term, it looks like gold is finally working on a breakdown, so we'll see if we can get that. I do think a little bit more flush is probably reasonable here, and then we should be able to get at least a counter trend bounce out of there. The stocks still just refuse, don't they, to give a double bottom or a lower low with 2 drives pattern here, but we're due to bottom pretty soon, if not already. So breakout to new highs would confirm this is indeed the low, and hopefully what we can get, just for the sake of getting behind another trade, is something more like this. Time will tell. We're definitely close to a turn as we approach the last week of this month. And as we kind of already touched on for Bitcoin, right, tape slaves out there, they get extremely bearish every time we see a red candle. They get extremely bullish every time we see a green candle. But the cycle needs a little bit more time to get to the end of the month where it can actually put in a sustainable low. And then it should be party time, right? And if we're going to do this and move to new highs, that would be the time to do it. If we're going to totally invalidate this blow off top in Bitcoin and just look for a distribution and a rollover, it's kind of in the same timing window we'd expect to see it. Just we'd expect to see a lower high rollover here as opposed to a big push to new highs. On a balance of probabilities, call me too bullish, call me permeable, call me whatever you want, but I actually think we've got a chance here. I think the path of least resistance is actually to new highs for Bitcoin, and I do think we're going to get new highs. But of course, if we don't, then we can at least use the cycles to say, well, oh well, it doesn't matter. We know the cycle's failed now. We know we've used it up all the time, and we can start to head for that 4-year cycle low. Notice how a bunch of these crypto mining stocks as well probably have started to complete their wave 4 and are looking for big bounces here across the board. Things like Riot as well looks to be potentially completing its wave 4 here before its final push. Same is true of Bitfarms, that's another one. Okay, it looks like we've pretty much finished the sharp after the alternation for the sideways 2. I think we're about ready to see these things melt higher one final time, right? And again, we've been using these as leads for Bitcoin, which kind of speaks to this cycle being about to bottom and run higher. So we'll give it a few more days as ever. We'll keep taking it one day at a time. We've got loads of profit here, and really the focus has been on moving, largely speaking, to cash before Christmas, in that kind of Christmas time frame, and then expecting to come back to Armageddon next year. I want to end this episode today with this tweet that I wrote this morning. Watching everyone scramble to find an explanation for the bloodbath in 26 is going to be entertaining for the few. Okay, they're going to blame black swans, aliens perhaps, or some tweet from the POTUS. In reality, the cycles are synced up and ready to head for major lows next year, and the vertical price action concluding a 43-year secular bull trend that started with a range break of 82 will finally be ready for a mean reversion. In hindsight, it will be obvious. We'll look back at all the cooking of the books and the losing of the jobs data and start pointing fingers. Or we'll start accusing these larger accounts of herding retail to slaughter to help out their old pals on the inside. But once again, the cycles are in control. Everything else is narrative. Victory will be hollow, but it will be a victory nonetheless.
Camel finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game.